Welcome to the DebtCircle Key Roundups. I am Vijendra.
And I'm Leela. We've got some exciting updates to share today. NABFID is planning a multi-tenor bond issuance to raise capital. The RBI has set the redemption price for sovereign gold bonds at 15,275 rupees, and the Indian rupee gained 39 paise and opened stronger at 95.37 against the US dollar this morning. Lots to cover.
Let's start with NABFID. They plan to raise 500 crore rupees through bonds with tenors of 3 years and 1 month and 10 years. Each tranche has a base issue size of 50 crore rupees with a greenshoe option of 250 crore rupees, potentially totaling 300 crore rupees per tranche. The coupon rates will be decided through a bidding process on June 12th, with NABFID inviting both coupon and commitment bids, aiming to optimize pricing and investor participation.
The bonds carry AAA ratings from CRISIL and ICRA, signaling top credit quality. This strong rating should attract investors seeking stable, long-term infrastructure financing opportunities. Compared to recent issues like Axis Finance's 80 crore rupees bond maturing in 2 years and 7 months at 7.70% per annum, NABFID's offerings stand out due to their higher ratings and longer tenors.
Now, the Reserve Bank of India has set the early redemption price for the 2019-20 Series 7 sovereign gold bonds at Rs 15,275 per unit, effective June 10, 2026, reflecting a capital appreciation of over 307.88% from the original issue price. An initial investment of Rs 1 lakh would now yield about Rs 4 lakh 8,000 on early redemption, excluding interest. That truly demonstrates gold's role as a hedge against inflation and market risks.
This substantial gain shows how effective sovereign gold bonds are as a gold investment, especially since the bonds pay a 2.5% annual interest rate and offer capital gains tax exemption, enhancing net returns for investors. Since fresh sovereign gold bonds were discontinued last October, these legacy bonds remain attractive, but future returns depend on gold price trends, which could shift investor interest to alternatives like exchange-traded funds or digital gold.
Moving to the currency markets, the Indian rupee opened stronger by 39 paise at 95.37 against the US dollar, driven mainly by Brent crude, dropping to $88.80 per barrel, its lowest in 2 months due to potential peace talks with Iran easing supply concerns. Additionally, Reserve Bank of India's new FOREX swap facility lowers effective costs on external commercial borrowings to about 7 to 7.5%, making overseas funding more competitive for big public lenders, potentially bringing billions of fresh capital into India.
That drop in crude oil prices eases inflationary pressures on India's import bill, supporting the rupee's strength. Coupled with record inward remittances hitting 110.47 billion US dollars in fiscal year 2026, the first time surpassing the 100 billion mark, with the March quarter alone bringing in 31.07 billion US dollars, the external sector shows resilience despite weak foreign investments. Still, the rupee remains sensitive to global risks, and hopes of an Iran deal and softer US economic data improved sentiment, stabilizing the rupee as markets await the Federal Reserve's next moves closely.
On the policy front, the government has extended the credit guarantee scheme for microfinance institutions 2.0 until August 31st, 2026, raising the maximum loan limit for NBFC MFIs to Rs 1,000 crores from Rs 300 crores. Since March 20th, 2026, the scheme has facilitated loans worth Rs 770 crores with guarantees capped at Rs 20,000 crores overall, protected via the National Credit Guarantee Trustee Company Limited.
This extension and increased loan limit will boost liquidity for larger microfinance institutions, enhancing credit flow to small borrowers and supporting financial inclusion efforts. Extending the scheme's validity ensures continued support for microfinance, helping maintain momentum in lending and strengthening the sector's resilience, and it enhances confidence among banks and financial institutions, encouraging more lending to microfinance institutions overall.
On the cybersecurity front, Indian banks must submit board-approved AI cybersecurity assessments and action plans by June end per Reserve Bank of India directives. Cyber attacks on banks more than doubled since 2022, with over 493,000 incidents in 2025. Each breach costs roughly 2.5 million US dollars and takes about 263 days to recover. Due to talent shortages, many are hiring consultants to simulate AI-powered attacks and identify system vulnerabilities.
This surge in consultant use reflects the broader market challenge. Smaller banks struggle with limited resources, while larger ones invest heavily in AI security. The RBI's deadline is pushing the entire sector to tighten AI governance and cyber defenses urgently. By identifying security gaps early through AI-driven stress tests, banks aim to prevent disruptions that could harm consumers and the entire financial system, reflecting a critical shift toward advanced AI defense adoption.
On the banking sector, public sector banks have cut their liquidity coverage ratio from 137% in April last year to 123% in March 2026. Using reserves to fund loan growth, meaning less than 1 percentage point of new loans is now supported by excess liquidity. This signals a shift where future loan growth will rely more on deposit inflows than on liquidity buffers, limiting public banks' flexibility compared to before, especially as private banks prepare to accelerate their credit expansion next fiscal year.
Also, the new expected credit loss framework starting next fiscal year will raise provisioning expenses for public banks, eroding their credit cost advantage over private banks by year end. Coupled with intensifying competition from large private lenders regaining momentum, public sector banks face tighter margins and pressure to maintain market share, despite Reserve Bank of India's special foreign currency scheme boosting liquidity.
In infrastructure news, Indus Infra Trust has completed acquiring a controlling interest in KNR Ramagiri Infra Private Limited as of June 11, 2026, significantly boosting their infrastructure assets. The acquisition aligns with regulatory norms under Regulation 23, Clause 6 of the Securities and Exchange Board of India's Infrastructure Investment Trust Regulations, 2014, with GR Highways Investment Manager Private Limited handling the deal. Though 488 equity shares remain with the seller, the trust has effective control since the acquisition date with legal transfer underway.
That's a strong strategic move. Gaining control enhances their asset portfolio and market position, and communicating completion to IDBI Trusteeship Services Limited and publishing details publicly ensures transparency, reinforcing investor trust in their governance and compliance standards.
NHC Foods has upgraded its total bank facilities of Rs 60 crores to a long-term rating of QUIT BBB with a stable outlook, moving up from IVR BBB-. The facilities include a term loan of Rs 2.36 crores, cash credits totaling Rs 46 crores, and a proposed long-term facility of Rs 11.64 crores. Meanwhile, MTNL missed funding the escrow account for the 6.85% bond Series 6 interest due June 21, 2026, showing severe liquidity stress despite a sovereign guarantee from the Government of India.
The NHC upgrade signals stronger financial health and better debt servicing ability, though maintaining this rating depends on strict compliance like monthly no default statements, and any slip could lead to rating revisions. On MTNL, this failure triggers the debenture trustee's right to invoke the government's sovereign guarantee, ensuring bondholders eventually receive their payments, but it also highlights ongoing operational cash flow issues. Investors must watch for delays or complications during the guarantee invocation, as well as any updates on restructuring or performance to gauge future risks.
Let's talk about private credit in India. It's not a single product but a diverse range including senior secured lending, mezzanine finance, unitranche structures and others, each with unique risk and return profiles. Capital flows from investors into Category 2 alternative investment funds managed by general partners who lend tailored debt to corporates, targeting net returns in the low to mid-teens % per annum after fees. Investors commit a minimum of Rs 1 crore, and funds have a life of around 5 to 8 years.
Funding instruments vary widely. Senior secured non-convertible debentures are most common, backed by collateral like property or receivables. Mezzanine debt offers higher returns but more risk, often with equity-linked features, and unitranche loans blend senior and subordinated debt for simpler deals. Security packages and underwriting discipline are vital. Lenders secure loans with fixed assets, pledged shares and escrow accounts, while protective covenants limit borrower actions. Foreign investors enter via domestic AIFs, external commercial borrowings, or funds in Gujarat International Finance Tech City, balancing regulatory and tax factors.
In corporate bond market activity, Edelweiss Financial Services closed its secured redeemable non-convertible debentures early on June 12, 2026, raising Rs 300 crores, the full target. Ahead of the planned June 19th deadline, the issue had a base size of Rs 150 crores with an equal oversubscription limit totaling Rs 300 crores, fully subscribed with 30 lakh units at a face value of Rs 1,000 each. No regulatory concerns were reported, positioning Edelweiss well compared to peers.
This early closure shows strong investor confidence and a robust appetite for debt instruments, boosting Edelweiss's capital structure and liquidity. On the ratings front, CareEdge Ratings downgraded PG Foils Limited's bank facilities from BBB+ stable to BBB negative, impacting bank facilities of 195 crores rupees, mainly used for working capital with lenders like IDBI Bank Limited and HDFC Bank Limited. The short-term rating also dropped from A2 plus to A3 plus, signaling growing uncertainty about timely repayments.
India Ratings downgraded Vikran Engineering's long-term credit rating from IND A- negative to IND BBB plus with a stable outlook. The main concern being the 37% concentration risk from the NOPL solar project in their order book. Vikran needs an equity infusion of 840 crore rupees to support the NOPL project and secure debt, and they have outstanding non-convertible debentures worth 100 crore rupees and bank loans totaling 470 crore rupees. Conversely, India Ratings upgraded Gravita India Limited's credit outlook from stable to positive, reaffirming its long-term bank loan rating at IND AA- and short-term rating at IND A1+, on 150 crore rupees, reflecting Gravita's strong position in non-ferrous metals manufacturing and recycling, coupled with effective debt management.
On Gift City, it's targeting a larger role in the global aircraft leasing market, valued at $187 billion in 2025, currently led by Dublin. It hosts around 40 lessors managing over 220 aircraft and engines, boosted by India's new Cape Town Convention Act. The International Financial Services Centres Authority introduced regulations allowing trust and company service providers to create special purpose vehicles for leasing within Gift City's IFSC, separating lessor and lender roles to simplify transactions and attract global players. India's aviation fleet of about 800 to 900 planes, plus 2,200 aircraft on order, signals strong growth potential here.
ESAF Small Finance Bank's total business volume crossed rupees 50,029 crores as of June 11, 2026. Deposits are rupees 26,197 crores and advances are rupees 23,832 crores. With operations in 26 states and union territories and over 816 branches, their reach supports this growth. These are provisional numbers pending audit, but the broad geographic footprint and balanced growth signal strong positioning in regional banking and India's financial inclusion ecosystem.
PIMCO, managing $2.3 trillion in assets, warns a credit loss cycle has started, driven by AI investments worsening disparities and hitting low-quality borrowers, especially in leveraged loans and private direct lending. Despite this, high-grade credit spreads are near their lowest in 30 years, showing investors accept minimal yield over US Treasuries. The increasing use of maturity extensions and payment-in-kind debt servicing signals borrowers' financial stress, and this could worsen credit losses if the economy weakens further, making the near future challenging for lower-quality issuers impacted by heavy AI-related capital spending.
And finally, wrapping up today's bond market roundup, Jana Small Finance Bank shareholders approved allowing the bank to issue warrants and convertible securities with over 99.99% in favor. Canara Bank, Bank of Baroda, and HDFC Bank raised their marginal cost of funds-based lending rates by 5 basis points on selected tenors, effective June 12, 2026, with the 2-year rate increasing by 10 basis points. This follows the Reserve Bank of India keeping the repo rate steady at 5.25%. In the primary market, Axis Finance raised 8,000 crores through a floating rate bond at 7.70%. Tata Capital raised 20.30 billion rupees through a 3-year bond at 8.15%. Tata Capital Housing Finance accepted bids totaling 11.25 billion rupees for a 5-year bond at the same rate. L&T Finance is opening bids for a 3-year bond at 8.12% to raise up to 15 billion rupees. Sundaram Finance aims to raise up to 12.6 billion rupees at 7.95%. LIC Housing Finance is set to raise 30 billion rupees with a 5-year bond. And Indian NBFCs have raised over rupees 310 crores in short-term bonds this week, with RBI measures cutting borrowing costs by 40 to 45 basis points, with Rural Electrification Corporation and NABARD issuing 3-year bonds at 7.34% coupons, well below previous secondary market rates near 8%. That's it from us today. Thank you for listening to the DebtCircle podcast.